This is Bill Scheid from Applied Finance Research with results updates for all of our systems as of the end of the year 2024. So for comparison purposes, we're going to start off by taking a look at the buy and hold results of the S&P 500 from the end of December 2007 through the end of December 2024. So we have a total return of 453.7%, a maximum drawdown of minus 52.3%. That gives us a compound annual growth rate of 10.6%. Our return to maximum drawdown ratio is 8.7, and the ending balance of a hypothetical account starting with 100,000 is 553,700. Now, the total return here is not bad, but most investors would have a hard time with the maximum drawdown of minus 52.3%. So next we're going to take a look at the results for a 60-40 buy and hold approach. So that's 60% all world stocks and 40% bonds. Here our total return is 148.9% with a maximum drawdown of minus 34.7%, compounded annual growth rate of 5.5, return to drawdown ratio of 4.3, and an ending balance of 248,900. So we have less than half of the total return on more than half of the maximum drawdown. Now, let's take a look at the first of our monthly systems. This one is called BMR 21, Blended Monthly Rebalancing 21. It's a momentum-based system. Total return is 704.5%, maximum drawdown minus 34.3%, compounded annual growth rate of 13.1, return to drawdown ratio 20.5. Our ending balance jumps to 804,500. The expectancy of this system is 0.37. The system quality number, which is a system metric popularized by Dr. Van Tharp, is 3.32. And according to Dr. Van Tharp, this would qualify as an excellent system. So here we see that we have almost the same return, slightly less than the 60-40 buy and hold approach on a return that is much greater than the S&P 500. Next, we're going to take a look at the same system, BMR 21, but now we're going to add our volatility stops and optional short positions. So here we see that the total return jumps to 975.2%, maximum drawdown minus 15.7, compounded annual growth rate of 15.0, a very high return to drawdown ratio of 62.1. Our ending balance now becomes 1,075,200. We have a very high expectancy of 0.3 and the SQN jumps to 4.0. Again, Dr. Van Tharp would say that this is an excellent system. So here we see that our maximum drawdown is less than half of buy and hold, and our return is more than double the S&P 500. Let's take a look at our next system. This is called PMA 5. This is a portfolio moving average system designed specifically with the objective of a low maximum drawdown, and we would be willing to accept a lower return for that. This system could be very good if you're looking to avoid sequence of return risk for capital that you may need to use in the short term. So we have a total return percent of 149.6. Maximum drawdown of minus 13.6, compounded annual growth rate 5.5, return to drawdown ratio of 11.0. Our ending balance is 249,600, expectancy 0.27, and an SQN score of 3.1, which again, Dr. Van Tharp would say this is an excellent system. So here we see that our return is about the same as 60-40 buy and hold, just slightly more. However, we've done that on 1/3 of the drawdown as 60-40 buy and hold. So we have hit our objective here, a very low drawdown for this system. Our next system is also a portfolio moving average system. This one's called PMA SPY. Here we said we would be willing to accept a medium size maximum drawdown for medium total return. So our stats, total return on this one, 501.4, maximum drawdown minus 26.7, compounded annual growth rate 10.6, return to drawdown ratio 18.8. Our ending balance is 601,000. We have a very solid expectancy, 0.38, with a very high SQN of 4.36. What I think is interesting about this system is we said we would be willing to tolerate medium-sized drawdowns. However, our drawdowns are less than the 60-40 buy and hold approach. And we said we would accept medium-sized returns. However, our returns have beaten the S&P 500. So I think we definitely accomplished our objectives with that one. Next, we have PMA SSO, also a portfolio moving average system. Here we said we'd be willing to accept higher maximum drawdowns for higher returns. We certainly hit our higher returns at 1,383.8%. And here our maximum drawdown is actually less or about the same as 60-40 buy and hold, which gives us an extremely high return to drawdown ratio of 41.3, a very high ending balance of 1.48 million. Expectancy 0.35, SQN 3.7. Again, Dr. Van Tharp would say this is an excellent system. Next, we're going to look at the first of our hybrid systems. This is a hybrid of BMR21 and PMA SPY. We see that we have a return of 738%, which is towards the higher end of the two subcomponent systems. And our maximum drawdown is only minus 14.1, which is on the lower end of our two component systems. So one of the reasons that we like the hybrid systems is the idea of diversification of systems inside of one actual meta system. So here we have an expectancy of 0.44 with an SQN of 4.58. So very high expectancy, very high SQN. Dr. Van Tharp would say, again, this is an excellent system. And our last one up is a hybrid of BMR21 and PMA SSO. Here we see we have a return of 1,276.9 and a maximum drawdown of minus 19.4. So again, we have an expectancy towards the higher end of the two subcomponents and a maximum drawdown towards the lower end of the two subcomponents. Here our ending balance is 1.38 million. We have a very high return to drawdown ratio, 61.4, high expectancy 0.41, high SQN of 4.44. And again, Dr. Van Tharp would say this is another excellent system. This is Bill Scheid from Applied Finance Research. Thank you very much for watching and happy investing.